अगर हम सेंसेक्स की बात करें जो 361 पॉइंट गिरा है, एंड इफ वी टॉक अबाउट द निफ्टी, इट हैड fallen by around 4%. Now the irony of the fact is why the market have fallen, and while the global markets have been up, or in this video I will try to unravel how you should as an investor look into the market, because having said that, not everything is so much dull and dim as it seems. So however, if you would see the news over the last fortnight or 15 days back, they were saying that mid caps are too valued, mid caps are too valued, don't buy into it, don't buy into it, resulting which certain statements were also made by the the head of the SEBI, and the mid cap stocks corrected. Now if we see globally, between the last 3 sessions, the Sensex had been doing very well, the Nifty had been moving, surging ahead and ahead, and yesterday also, and if we see today also, the global markets were positive, but Indian Sensex or indices were down. Why so? There are a couple of reasons for that, but before I go, I would like to share with you the screen so that you know in accurate perspective how the markets have been, and where we stand as far as they go. So here you see the markets everywhere. Okay, so here what we are seeing is Nifty 500. Okay, so Nifty 50 minus 0.42, Sensex has been down, BSE large cap has been down, the mid cap has been up, but the BSE small cap has been down. But if we see it in a correct parlance, say among the world indices, we are seeing that like the market is still open, and S&P 500 index has been up, Nasdaq has been up, DJ Dow Jones has been up, your Nikkei has been a bit flat, I would say, but FTSE in the UK and DAX also, they have been up, while everything else had been green. Only the large cap funds, you can say the top indices in India had been negative. Now, if we come on to the highest volume stocks, we say like SDFC, because it had fallen. SDFC and Indian Railway, Indus Towers, they had been among the highest volume stock, and while the most volatile ones are here, as you can see. But none the case, that would be, I would like you to see this. Now, if we see current trending equity markets, you are seeing Nasdaq, S&P 500, Russell, Dow Jones, they are all in the green. They're all in the green. So therefore, we are expecting a market to go up tomorrow if these markets close at a high. And if we see here gold, the gold is also inching into the green. The crude oil is edging lower. It was earlier positive, so it going down, the crude or the Brent crude going down will actually pull up the equity markets globally, as we would see it. On the other hand, if we see US dollars is strengthening against the euro, so this is how these things are going. And if we see the equity sectors across all the sectors except real estate, utilities and energy, they have been down. But then it comes in case of India, where we are standing. In case of India, what are the sectors that have been hit too hard? The sectors that have been hit too hard have been related to the information technology, banking, and media. So far to say. Now, if we see from the market capitalization point of view, mid caps had actually given the positive +4% return, led by oil and gas, metals, and reality. So what does this mean? This means that if you are investing, you cannot just listen to what is there traded on the news items. So we had been working on Praj Industries, and that has been up. We had been working on PSP projects, that had been up. So there had been many stocks in the mid cap stable that has been up by as high as 7% to as moderate as around 1.5 to 2%. So the point is, you need to look at the market capitalization. So again and again, I am saying that the opportunities are bottom up, because there is a volatility into the market. And when we say that the Sensex is going up or the Sensex is going down, you are not investing in Sensex. You are not investing in Sensex. So therefore, investing in Sensex is of no relevance to you, because you are investing in a stock. But if you are a mutual fund investor, then obviously that will give you a sense of the direction to it, because at least till the time the elections are not over, the market will be too much volatile. So if there is one sector going up, there will be another sector going down. There might be announcements with regard to the public sector enterprises. There will be announcements regard to the oil, metal, commodities. There might be limitations by the government in terms of certain purchases. So that might impact. So therefore, if you're invested in indices or you're invested in the funds, then you might might not see much of the value coming out there. But however, if you have taken stocks bottom up, so that means stocks which have corrected a lot are value picks, have good return on equity at a reasonable price to earning ratio with a lower debt to equity and better return on assets with commensurate to your holding period and your financial acumen and your time frame, it could be a very very good buy. As we have seen in the recent past, there have been stocks that have been straight up and still even now trading at around 80 PE. But I am not saying that you should go for the stocks for 80 PE, but what I am saying is that there is always an opportunity around the corner while you go for it. So therefore, even if you want to have some stable stocks to be invested into, or where the more focus is like reality or the metals, you should not go with the close eye. You should go at what price you need to buy them. So even if it is a company, even if a company is good and you want to buy into a company, you have to buy it at a very good price. You cannot buy it at an exorbitant price and then you will wait for the next 6 months to it to average out and be at par. So therefore, having said that, we have seen here today, while the global markets have been up, the Indian broader indices have been down, but still there had been opportunities. Still there had been opportunities in the mid cap space in India today, where the money was made.